Hi guys, did you know that the value of Bitcoin has increased over 6 times in just 1 year? That means if you had invested 1000 rupees in Bitcoin just a year back, today its value would have been 6000 rupees. Also, the value of Bitcoin hit $1 about 10 years back in 2011, and today its value is $57,000. That means if you had invested 1000 rupees in Bitcoin 10 years back, today its value would have become 5.7 crores. Hi guys, my name is Prateek and welcome to Business Minded. Today we'll talk about Bitcoin, what are cryptocurrencies, how do cryptocurrencies work, and should you or should you not invest in cryptocurrencies. In order to understand what cryptocurrency is, let's first start with understanding what currency is. Currency is nothing but a means to store value and to exchange value. It all started with the barter system, which was used in the ancient markets for trade and business. So barter system in most simple terms is exchange of one item for another. For example, suppose you have some corn and person A has some milk. Now you can buy that milk for some of your corn, and this system was working fine. It was working perfectly for you until one day person A said, I don't want corn anymore. I want some rice in return of my milk. And this was a problem you had never thought of before. Now this problem led to the need of a standardized value system or a currency system so that you could give some of that currency to person A in return of that milk, and person A could give that same currency to person B in return of the rice. So initially this currency used to be gold or some other metal, but then that had some disadvantages. These metals were difficult to carry from one place to another. They are easy to steal away, and it is difficult to break them into smaller pieces on the spot of trade. Suppose you needed some change. So the governments came up with a solution to this problem. They started issuing currency notes. In return of the gold that you deposited with the government, they would issue a currency note of an equivalent value to you, and you could use that as a standardized currency everywhere in the country. So this system continued till the 1970s and the 1980s, that the government could print only that much money which was equivalent to the amount of gold that is deposited in the central banks. But later one day the government had a wonderful idea. They came to you and said, I'm telling you bro, the value of this money is 500 rupees. I'm promising you its value is 500 rupees. You don't even need to deposit that gold in return of it. Just keep it and be happy. Thus was born the modern monetary system of the world, which is also called the fiat money or the fiat monetary system, which means a piece of paper that has no intrinsic value. It has been declared money by the government order. So now the governments had full control over the monetary system of the country. They could now print as much money or as little money as they wanted to. They can now easily control all the monetary forces and the economic forces within the country. This system, as you might have guessed, has a lot of loopholes and disadvantages. The biggest disadvantage of the current monetary system is that the government has too much power over your money. Since the currency has been made valid by the government order, the government has the power to withdraw that order whenever it wants. Although in the past demonetization in India, only those people were affected who had cash stashed at their homes. The people who had money in their bank accounts were relatively safer. But it is possible that in future some government can declare that any asset held in the form of INR is invalid. Yes, they have that power, which means you don't have any control over your own hard-earned money. Another problem with the current monetary system is that there is no control over the printing of money. The governments can print as much or as little money as they want to. When the COVID pandemic started and the entire world went into shutdown around March last year, that time the US government started printing trillions of dollars in order to compensate for the reduced productivity. Nearly the same time, the Yes Bank crisis also unfolded in India, and here also the Indian government was forced to print crores of rupees in order to compensate to the Yes Bank account holders. Now the problem is, if the government prints and circulates more money into the market, the value of money or the purchasing power of the money will reduce, and the cost of the goods and services will increase. Thus, once again, the government is reducing the value of an asset held by you without your control over it. And in other words, the government is taking away your hard-earned money. Not just that, also in the normal situations, the governments around the world is printing billions of dollars continuously. which means that the value of money is bound to reduce over time. Thus, any asset held by you in the form of INR, whether it's cash or bank balance or even FTs, will have its value reduced over time without your control over it. Another problem with the current monetary system is the centralized ledger. That is, all the money that is held by you in your bank account is controlled by a single entity, that is your bank. Hence the term centralized. Also, the records of all the money held by you and all the transactions made by you is maintained by a single centralized party, that is the bank. Now, since all the money is controlled by a single centralized party, they have the power to lend it to whoever they want. And at times, they can make mistakes. They can lend it to the wrong people, which can result in bad loans at times. In order to solve the problems that we mentioned previously, now we needed a currency that has limited supply. That means no one can print it as much as they wanted to. It should be decentralized. That is, no single party or single authority should have complete power, complete control over all of it. It should be free from the government control. That means no government in the world should have the power to completely take away all the value from it. Thus, cryptocurrencies is one way to handle and solve these problems. How? Let us find out in the next part. Now, finally, we are at the point where we'll explain what cryptocurrencies are. In order to explain the cryptocurrencies, let me draw a parallel with the mobile digital payment apps, say the Google Pay, Paytm, PhonePe, etc. What do you do in these apps? If you have some of these currencies, normally it will be sitting in your digital wallet, similar to these mobile digital apps. And if you want to transfer it to someone, you will enter that person's ID and you will type your private PIN into it and you can make the transaction. Thus, the currency will be transferred from your wallet to the receiver's wallet and the transaction will be completed, similar to the digital payment apps. Now you'll be confused. Then why do we need these at all? Don't we already have these mobile digital payment apps? Difference between the cryptocurrency and the mobile payment apps is that for the mobile apps, the ledger is controlled by a bank, which is a centralized party. While for cryptocurrency, which works on the blockchain technology, the ledger is distributed across the globe into millions of computers. Also, any transaction made between you and your receiver is not carried out by a third party, say the bank or the payment platform, but it is taken care of by the network itself. Any government cannot control or it cannot cancel the value of these currencies. Also, any mistakes made by the economic policy or monetary policy of any particular country will not lower or will not affect the value of these currencies. Another important characteristic of a good cryptocurrency like the Bitcoin is that it is rare in nature. That way, it is kind of like gold. It occurs rarely in nature and it is very difficult to mine. If gold also occurred abundantly in nature, like the dust or sand, it will stop being so valuable. It will lose its value. Also, the number of Bitcoin that can occur, the total number, the upper limit is fixed at 21 million. That is the total highest number of Bitcoins that can ever occur in the world. Also, the process of creation of Bitcoin involves solving very complicated maths puzzles with the use of very high computing power machinery. And the number of Bitcoins that can be created every year keeps on reducing with each passing year. So this is why some good cryptocurrencies like the Bitcoin and the Ethereum have become so valuable these days. They are rare in nature, have limited supplies, and are difficult to create on one hand, and the number of new Bitcoins being created every year is reducing with each passing year. Also, more and more governments around the world and more businesses are now open to Bitcoin and are accepting Bitcoin and are supporting Bitcoin. So more people are now getting interested in it and are willing to buy it. So the demand is also increasing. So the rare supply, people buying it and hoarding it, while outside the demand is increasing steadily, is the reason why the prices of Bitcoin have grown enormously in the past few years. However, the past growth of any asset can never be an indicator of its future growth. The future long-term growth of anything depends on its intrinsic value. That is the value that is added by the asset to the economy or to the society as a whole. Now, how do cryptocurrencies work? What is the underlying technology behind cryptocurrency which adds the intrinsic value to this asset class? How is the technology improving with time? How are the newer cryptocurrencies, say the Ether, better than the original cryptocurrency, the Bitcoin? In order to understand all of this, we need a whole new video for this. So stay tuned on this channel. In the next video, I'll be explaining all these concepts in detail. Now, as to the question whether you should or you should not invest in cryptocurrencies, you have to understand that if at all you choose to invest in it, it should be for the right reasons. Not because you see the prices rising every day, not because some rockstar entrepreneur tweets about it, and not because you hear a lot about it on news or on social media every day. If at all you invest, it's because you understand the intrinsic value of an asset class and you believe in that value. If you thoroughly understand the impact that the blockchain technology and the cryptocurrencies are going to have on the world economy in the coming decades, if you thoroughly understand that, if you thoroughly believe in that, then you can decide for yourself whether you want to invest in this or not. Guys, I'm not a financial advisor and I'm not qualified to give any financial advice. But I can only tell you what I personally do. I, for instance, do keep a small portion of my investment portfolio in crypto. And I started investing with the money that I was okay to lose anyways. Which means it can be your party money, or it can be any money that you were about to lose anyways, but you saved it out of self-control. That kind of money you can invest in crypto and you can start testing the waters before making the serious decision about it. As Elon Musk, the most famous person who backs crypto, says that you can hold your money in crypto as an alternative to cash, but don't put your entire life's earnings into it. That will not be wise. Once you slowly start understanding the world of crypto and you have tested the waters, you have got a feel of the market, then you can decide for yourself whether you want to go any deeper into it or not. So that's all we have in this episode of Business Minded. If you like this video, give it a thumbs up. That will tell the YouTube algorithm that these videos are helpful, and that way it will help a larger set of people through the YouTube algorithm. Thanks a lot for watching.